Hello, everyone. Welcome back to Financial News. We're coming from Palos Heights, and we have Paul Munichel with us from Ameriprise. And Paul, you usually introduce yourself. I'm Ron Jankowski, by the way, in case no one knows. I'm going to let you take it from there. And would you want to start, or do you want me to?
Sure. I'll go ahead and start.
Okay, and I'll pick up what you need to know if you're going to be investing.
Absolutely. We had a very volatile week in the market last week for anyone that was watching, and a lot of it had to do with the inversion between the 10-year and the 2-year yield curve inversion. It was finally here last week, but what of it? The 10-year and the 2-year spread has finally inverted, and this was back on Wednesday last week, after long threatening to do so. Now, despite this signal and the fact that we do see recession risks currently elevated, Ameriprise rates it at about 30 to 35% chance of recession. We, meaning Ameriprise, do believe a U.S. recession remains unlikely over the immediate term, which we rate at about 12 to 24 months. That said, investors should keep in mind that financial markets may react as if there is a strong threat to corporate sales and earnings that a recession normally brings, and stocks could adjust accordingly. In other words, even if we don't see an actual recession, stocks could act as if there is one. Ameriprise does maintain our position as originally noted going back to last year. Yield curve inversions primarily reflect bond market sentiment. The signal is not based on some magic formula that makes it infallible in the art of predicting the future. Nor is an inverted yield curve causation of a recession, though it does offer some pressures in certain segments. However, the curve is obviously reacting to current economic conditions, which have deteriorated and continue to do so. Going back since 1970, an inversion of the 10-year and the 2-year Treasury spread has typically come about 18 to 24 months before the onset of an actual recession. This time is different, however. The current inversion comes at a time of historically low interest rates around the world. This is generally a new normal, given advancing global demographic considerations, in our view, and a position that leaves spreads narrower and thus closer to inversion territory. With the Fed rate currently too high, in our view, yet sitting like a cement brick under the short and long end of the curve, or the short end of the curve, and longer dated market-based treasury rates having adjusted sharply lower, as strongly influenced by international comparisons, the curve has inverted. We've got charts that will prove this and examples we can go on, and more data I can happily give any of you at home if they want to see it. But we do leave the economy more susceptible to recession. And I've got charts and data that can support this should you want any more information on this topic, because it was the big mover of the market last week. Feel free to give me a call directly. Again, I'm at 708-226-3412.
Paul, didn't President Trump ask or insinuate something to the fact that he was asking the Feds to reduce the
He's been
rate?
doing that. That's nothing new from last week. He's been asking for the Fed to cut rates for a while now.
Yeah, which is going to have a change on the economy if he were to do that, I would imagine.
Yep.
Some morning notes that Ameriprise had shared with us, and the S&P 500 index futures are pointing to a higher open after productive trades negotiations between the U.S. and China. And Paul, jump in if you have anything you want to add to these notes that have been shared with us.
I mean, the big stories that the market is watching is earnings, as they always do. They're watching the yield curve, which is not inverted anymore, but they're watching that and any updates on trade resolutions. So just as your report states, just talks about it, positive talks is going to make the market change.
Yeah. The yield, excuse me, the yield on the 10-year Treasury is higher to around a 1.61%, while the yield on the 2-year holding near 1.51%.
That's important. That just backs what I said. The
Yep.
yield curve is no longer inverted, so take it as you will.
And going to Hong Kong's Hang Seng and China's Shanghai Composite each rallied more than 2% overnight after the country's central bank announced key interest rate reforms. That should be interesting to see. And this is interesting as well. WTI crude oil is trading above $55 per barrel despite an OPEC report cutting its forecast for oil demand growth. The last thing I want to share is where the markets are today, as of today being August 19, 2019. S&P 500 is a plus 16% year-to-date. The Dow Jones is a plus 12% year-to-date. And the NASDAQ is a 19% year-to-date, all holding well.
Again, despite the big drop-off on Wednesday, the market has already come back substantially since then, and those numbers you're reporting as of Friday's market close are still positive on the year.
Right. All right. Thank you, Paul. Stay with us. We will be right back with a program called Your Money. You might be interested in some of the topics Paul is going to share with us. Stay with us. We'll be right back. Thanks for staying with us. We are going to bring you Your Money Show. And Paul is going to be talking about, are you and your spouse on the same page about retirement? Very, very interesting, and something that you really need to understand. Both have an understanding where you're going.
Absolutely. Retirement is one of the most important financial goals for many married couples. It's something you may dream about and work hard to reach. But even if you feel like you are on track in terms of meeting your financial objectives, there is an equally important factor to consider. Are you both on the same page about your vision and plans for retirement? So, for example, what if your ideal experience in retirement is to travel, but your spouse is looking to stay local to be near family? Have conversations in advance of retirement to make sure you and your spouse are on the same page.
Paul, planning is super critical, isn't it?
It is. The years leading up to retirement are an important time to compare their ideas and see if there are any obvious conflicts. Today we're going to go over a few couple of different topics to address.
And you really need to plan when you're going to do this.
Exactly. So if one spouse wants to work longer than the other, that may be fine. If the spouse who retires can either pursue other activities in the interim, but if your plans are dependent on being together, you'll want to come to agreement on when your actual retirement together will begin.
And then what obviously would be important is, where do you plan to live?
It's a big deal. Different states tax retirement in a different way, and cost of living is different. So it's a critical issue that requires mutual understanding. Will you stay in your current home or geographic location? Do you plan to spend winters in warmer climate? What are your thoughts about living abroad? Make sure you have a plan that works for both of you.
Your vision of a retirement lifestyle is so important, isn't
And people's can be different. What will keep you occupied in retirement? Are there activities that you will both enjoy, or are you fine with pursuing separate aspects of retirement independently? The more you define this in advance, the better prepared you're going to be.
And you have to find middle ground that you both agree and go in the same direction.
As I'm sure you can attest to, any marriage
I'm
compromise
laughing.
is key. Yeah.
That's not easy to do.
Don't be alarmed if you and your spouse don't have the exact same idea of how retirement should work for you. It isn't unusual. What's important is finding ways to come to an agreement. That may mean each has to give a little to make it work. Flexibility is also key. Once the reality of retirement sets in, either person's viewpoint might change that and could affect your decisions. So be prepared for the potential that a medical event could alter your plans, as this is more likely to be a factor as you grow older. Also, your financial circumstances are always a consideration. Have a discussion with your financial advisor about your retirement plans and try to have agreed upon strategy in place before you wrap up your working years.
Paul, if there's a question a viewer has, can they call you?
Absolutely. This is a topic I get a lot of calls about, planning for retirement, what to do with old 401k rollovers. Am I in a position to retire? Anything along this topic or any other, feel free to give me a call directly. Again, my number is 708-226-3412.
All right. Thank you again, Paul, for bringing that topic. For Paul Munichel with Ameriprise Financial, myself, Ron Jankowski with Channel 4 in Palos Heights, we wish you good investment day.